Hello traders, Steve Gans here, and I want to share with you a way that I continually adjust my Avgo long call trade. So this is a specific trade that I've been doing updates on a fairly regular basis. I actually bought Avgo as a leap quite some time ago, over a year ago. That position was up $100,000 plus, and I went through in a recent video and I walked through this chart showing where did I sell a call spread, how many call spreads did I sell. I brought in an additional $13,000 in premium. I sold those for $3.45 each. I closed those out a few days ago for 8 cents each, picking up about $13,000 in profit. In the video I did yesterday, where I kind of walked through this entire process, I mentioned that if Avgo looks like it might be stalling out here, because this would be a logical resistance area, that I'll probably come in and do the same thing again. I'll come in and I'll sell another call spread against this. So that's actually what I did yesterday afternoon. Is I came in and I sold an additional call spread. So what I want to do now is I basically just want to come in here, shall we say, juice or squeeze this trade, particularly given my opinion is that Avgo might be at a resistance area again. I came in and I sold 40 calls again. Last time I sold them at 165. I bought the longs at 175. That trade again is closed out, or that prior hedge is closed out. I just opened this new hedge where I sold 172 calls. And again, we're currently trading at 166, so I got a little room on there. And then I bought the 182 calls, which gives me this amount of decay that can potentially happen on this trade. That's essentially an additional, they're roughly about $3 a piece is what I did there, and 40 of them. So about $12,000 in additional premium that I took in on this trade. Now, if Avgo does break to all new highs and starts to rip up, I may very well have to close this for a loss, or maybe roll it out further in time or higher up price-wise. But right now, again, circling back to Avgo, I am of the opinion that we might be at a resistance area here again, and either going to stabilize in this area, chop sideways, which would be fine for this trade, or maybe pull back again, which would also be fine for this trade. The only thing that doesn't really work well is if we rip up and blow through this 175 price zone and go on higher from there. If that were to happen, that's not going to be good for this hedge. It'll of course be very good for my underlying trade, but not so good for the hedge. So I hope you find this of value. Again, if you do, please like, subscribe, give me any comments or thoughts. If there's something you would like to see me delve into in the future, make a note, give me a note. Say, hey, Steve, what if you do this? And obviously, it can't be extremely in-depth, but some superficial things, this trade versus that trade sort of stuff, I'd love to share with everyone. So let me know what you'd like to see. Thank you. Take care.